Okay, so I think Wayne touched on some of the issues that Kofi will talk about. We know the issue of coverage in Africa is very critical. Our pension systems have been mostly designed to take care of the employed or the formerly employed, and that has brought in a very huge kind of problem when it comes to covering those who are, informally employed, those who have short-term employment kind of arrangements. So there are a couple of organizations that are trying to venture into that space to kind of create a solution. And that is where we've come to the situation of the micro pensions. I think Kenya has done something on that as well. Ghana has done that, Rwanda. So Kofi is from one of the pioneer organizations in Africa that are working to provide a pension system for the informally employed. And it's actually very unfortunate. The founder, I think should be Kofi's CEO.
Yes, please.
Yeah, he succumbed to COVID. Actually, I was very shocked. I think he traveled from Switzerland to Ghana. And he got
Luxembourg.
Yes. So it's quite unfortunate. A friend of mine, he has written for us for Pensions Africa. I actually learned about that when I was inviting him to speak at this conference. So this COVID thing is real. So we should always keep a distance. Kofi will talk about this, and the organization People's Pension Trust is doing a lot of work. I think they're also having a collaboration with the Rwanda system. And they've rolled out this system in Ghana, and it's working. They've employed technology to be able to tap into the informal sector. So, Kofi, are you ready?
Yes, please, I'm ready.
Okay, I will need to see. Okay, we will put your video on. Just make sure your video is on.
It's on.
On your side, then we will set it up this side. But then you can take it up.
Okay, all right. Thank you very much. I think enough of the introduction, and Wayne had even made my work quite easy. So I'll look at the background to the current pension regime in Ghana, and then we talk about the need for micro pensions, some of the challenges that we have come across, and then how we design our micro pensions to be able to meet the needs and aspirations of the informal sector. And then, of course, the drivers of micro pensions. Ghana has come quite far from the days of our colonial masters. For the past 10 years, we have had a new pension regime. Previously, we had a statutory body, that is Social Security and National Insurance Trust, that the law mandated to be in charge of having a social security system or a pension for all informal all workers. In fact, the law said that all workers. That's what the law said. Unfortunately, the scheme was a defined benefit scheme, and therefore it was very difficult to rope in the informal sector, because there's being a defined benefit scheme, contributions were mandatory. There was a percentage of your salary that had to be deducted. The employer had to add some percentage to it. Even though the statutory body then tried to get the informal sector through what they called voluntary contributor, where, of course, if you are informal sector, then you have to bear the cost of the total contribution. That went on for some while, but of course, it was obvious that the informal sector were not interested, and for very good reasons, because I call the informal sector people one of the wonderful people in the world. One man, he's the driver, the managing director, the accountant, and then everything. And therefore, to leave his office to go and pay a contribution was a huge problem. quite apart from that, there were some agitation by the formal sector workers that felt that the pension being paid by SNIT was not good enough. So there was some form of agitation, one to cover the informal sector and one to ensure that the pension being paid by the then statutory body, that is SNIT, was good enough. This led to around 2005-6 thereabout, a pension commission formed to look at a reform in the pension scheme. And that is what brought us to our current pension scheme, which we call the three-tier pension scheme. So for the three-tier pension scheme, the statutory body is still there, but it is supposed to handle just the tier one. And now what we say is that the law says is that 13% of the employers, 13.5% of employer's salary, gross salary is deducted, and then the employee adds 5.5. So 13%, the employer will add 13.5, 13%, and then employee 5.5. This brings it to a total of 18.5. Out of the 18.5, 13.5 will be paid to the statutory body, SNIT, and it is a mandatory, it's a defined pension benefit scheme. The 5% remaining will go to a private corporate trustee, and that corporate trustee, the scheme there is a defined contribution. So what it means is that when one goes on pension or retirement, SNIT will continue to pay your program withdrawal, monthly pension, and then the corporate trustee will, based on your tier 2, which is a defined contribution scheme, will now pay you a lump sum. The third tier was to make room for the informal sector workers. And so that is more of a voluntary contribution scheme where members can decide to join or not to join. So basically this formed the basis for the new pension regime. Oops, I'm unable to go to my next slide. What's going on? Okay, so the next slide, the last speaker said a lot about the next slide where he talked about the regulatory framework. So currently we have a regulator. In view of the new law, we have a regulator, National Pension Regulatory Authority, that issues licenses to corporate trustees and also issue licenses to we have custodians and then fund managers. So basically in the our regime now, you need 3 players to be able to play in the pension scheme. So you have a corporate trustee, and the corporate trustee must appoint a custodian, which is basically a bank licensed by NPRA, the regulatory authority, and then a fund manager, which also licensed by the regulator. So you, the trustee, every contribution that comes to you should go to the custodian. The fund manager then advises you on how to invest these funds. So technically, the trustee, you don't see fiscal cash. What you see is money on paper. Then there is also a guideline for investment, and this is quite in line with what Rosemary talked about a few minutes ago. It's all about yeah, so we have the government security. This is the guidelines. And again, like Rosemary said, we have a similar situation here. There's a cap on how much you can invest in a particular investment portfolio. Now, why do we need micro pensions? It's very clear. In Ghana, for example, you have a huge informal sector economy. We have over 85% of the working population in the informal sector. Cost of living is always increasing. One of the pillars of social security for Africans, particularly, and I'll talk about Ghana, was our family, extended family support system, which unfortunately is been broken down. Obviously, this will lead to people living longer, which will bring about, and of course, standard of living is going up. which will eventually culminate in old age poverty. And therefore, it's important that we look at this situation and do something about it. So we at People's Pension Trust decided to focus on the informal sector because of their how vulnerable they are. I'm sorry, I'm having a serious challenge with my slides. Okay, so let me I can just so I'll be speaking on so what are the problem that we see? Well, the problem that we see is that one, there is this issue that needs to be addressed: old age poverty. People are going to live longer. People need to have money in their old age. And the problem, to solve this problem, we think that every scheme you design should be very flexible. It should meet the needs and aspirations of the informal sector worker. So in Ghana, what we have is that one, it should be flexible. So for example, our scheme, there's not a fixed amount that you have to pay. It depends on, because these are informal sector workers, they earn their living by the day. So the amount to pay is, as a contribution, is not fixed. The period to pay is not fixed. So you pay as and when you want it to be. Again, what we have also done is to include or allow for a partial withdrawal. And with a partial withdrawal, that says that, look, when we register you, we create two accounts for you: a pension, a retirement account, and a savings account. Every money that you contribute, half goes into the retirement account and half goes into the savings account. 6 months after your initial payment, you can always come and withdraw from your savings account. What this does is that it makes them feel that, look, they can always have access to the funds they are putting down for their future. It also helps them to be able to meet their immediate needs, because unlike, say, formal sector workers, who even in Ghana, banks are chasing to give loans to, the informal sector workers don't have that access to loans. And the loans they have access to, the cost can be very high, and they are not sophisticated to plan like probably a formal sector will plan. And therefore, by allowing them to make a withdrawal, it helps them to meet their immediate needs. One of the things that we've also realized is that it even gives them some form of trust in the system, because if I come after 6 months and I can have my money, then it means that there are enough structures to be able to deal with it even when I grow old. So these are some of the things that we have put together. Now, the challenge with the informal sector has been, the main challenge has been the cost of operations, because they are widespread, they are all over the place. And if you take the Ghana case, we make money from fees, and our fees is just 1.33% of the net asset value. And therefore, what it means is that if your asset under management is low, then you won't survive. It's not sustainable. And therefore, to be able to get assets under management, you need to bring on board a lot more people. Bringing on board a lot more people, encouraging them to make contributions, also means cost of operation. And that is why what we have tried to do is to adopt technology and then partnerships. So we have taken advantage of the mobile money technology, where we encourage members to make contributions through their mobile money wallet. And what we have even realized is that for some of them, if you're able to automate this mobile money payment, they are even able to save frequency regularly and able to make more money. For those that you don't want to, they've not automated it, sometimes becomes a burden even to go through the process. So for example, we are using the USSD app, where a member can just dial a number and based on that number, he can just go ahead and then make his contributions. We are also working with some partners. So for example, we are currently working with Vodafone Ghana, Airtel Tigo Ghana, and I plan that they have payment platforms. So we take advantage of the payment platforms, and they have a huge subscribers. So periodically, they will send SMS messages to their subscribers, giving them a message about pension and telling them about People's Pension Trust. And anytime they've done this blast, we get a lot of calls. We have a dedicated call center. We get a lot of calls who inquire, and through talking to them, we are able to register quite a number of them. And then, of course, they can use the payment platform for the telcos to make their payment of contributions. We have also have partnerships with one of the biggest labor unions in Ghana, that is Trade Union Congress. They have an arm for the informal sector. They call it Union of Informal Sector Workers Association. And based on the partnerships, we are able to rope in their members and then get them to pay their contributions. We also go to all trade associations, try to get them on board. We go to churches, because it's the partnership that will give us the opportunity to reach a lot more people. I mean, if you take, for example, Vodafone has over 8.5 million subscribers. Airtel Tigo has similarly over 5 million subscribers. If we are able to reach even a quarter of them, then we will reach quite a number of them. One of the I think I've talked about trust already, because trust is a huge issue, particularly in Ghana. Those of you who have followed the financial sector in Ghana, you notice that last year we had to revoke some licenses of some banks and a lot of microfinance institutions. For the informal sector worker, giving money is giving money. It doesn't care whether it's pension, whether it's microfinance, whether it's whatever. And that created a huge problem for us. So what we've done is to go out a lot more, educate them, and then also when the withdrawal is due, we pay it. In fact, we have 48 hours period which to pay your withdrawal the moment you send in your request. So accessibility is one, and that is why we are using partnership. Trust is one, and we deal with trust by ensuring that our systems are on top. Withdrawals, we pay withdrawals regularly. The other thing has been education. We do a lot of education. The thing is that, yes, the informal sector workers have a misconception. Some of them think that they will never go on retirement because of the nature of their job. And therefore, constantly, we are talking to them, we are educating them. When the COVID came, one of the things we did was to send regular SMS messages to our members, educating them on pension, encourage them to pay using their mobile money and stuff like that. So in view of time, I will end here. And if there are any questions, I would like to take those questions. Thank you very much.
Thank you very much, Kofi. Do we have any questions for Kofi? Okay, we got a few questions, Kofi, so just stand by.
Okay.
Hello, Kofi. This is Talita from Zambia. Mine is not a question, it's a comment. I like the idea that education is key, because a lot of people who are not in formal employment think that they can always be able to carry on with their businesses, and yet there will come a time when what they've set aside is what will look after them. So I really like that point of view. So maybe that's something that we could also copy for other countries. Thank you.
Thank you very much. And one of the interesting things during our education we have found out is that the people in the formal sector always think that they don't have money. And that is one of the things we need to disabuse their minds of. So for example, in Ghana, when we start our education, one of the things we ask them in a group is that, for example, let me use, say, okay, dollars. How many people can save $1 a day? And everybody will raise their hand. And then you ask them, what about $2? Well, a few hands will drop, but we say, okay, let's maintain the $1. And it says, if you maintain the $1 and we even take about 20 days in a week, what it means is that you can save $20 in a month. And then they say, yes, they agree they can save $20 in a month. The next question is that, okay, so maybe we are 9 months into the year. So 9 times 20 should give us $180. Then you ask them, but do you have that $180 somewhere? And then they begin to look at faces, and then they realize that they don't have it anywhere. But we started from the premises that you can do this. So then the question is that the issue is not you not having money. The issue is a vehicle for you to channel this money through for your future. And so the education, we try to make it as practical as possible. Of course, again, we realize that some of them, they still have this old mentality that I'll rely on my children when I grow old. And then we need to bring their minds to the fact that how are you able to take care of your parents now? And also, if you're not able to take care of your parents now, why do you think your children will be able to take care of you? So the education is very key. Thank you very much.
Thank you. Hi, Kofi. This is Sandeep Raichura. I'll be on your panel this afternoon. I really enjoyed your presentation.
Thank you very much.
I have a couple of questions for you, like how many members do you have? What is the average amount they contribute? Once somebody has opened an account, how do you ensure persistency of contributions? Because you could end up having a lot of accounts open, but then no contributions flowing through. How are SMSs effective in communication? The next one is, do you allow withdrawals before retirement age? And if so, how much? And do people then frequently dip into their account?
Thank you very much. I think I'll have my time. When I host you, I'll also bombard you with questions. Anyway, so yes, we currently have 41,000 members. And you are right, the activity ratio is very low. Currently, we have active members of just about 35% of the 41,000 people. And the challenge has been how to make them active after you've registered them. So what we have realized is that when they automate these payments, especially through the mobile money, where they will say that every month or every day or every week, a certain amount should be swept from my mobile wallet to my pension account, you get them to be very active. Again, previously we were using a lot of human high touch, where we had what we call the sales agents who will be visiting them. But you realize that if you want to use that, it will increase our cost. And again, COVID has even taught us that that is not the way to go. And so what we are doing, yes, we try to go to them, but now in a limited way. But we are using a dedicated call center. So we have a call center that call people more frequently, encouraging them to make payment. So we have them. For those who have made payment once, we call them. For those who have stopped payment, we call to find out what they are doing and all that. So it's a constant engagement. One of the things that we've tried to do, which hopefully we will start next year, is an incentive system where, for example, we give you a target. So if you're able to contribute, say, $100 within a month, within 6 months, we will give you maybe $5. Okay, just to encourage them to save. And back to the withdrawal question, yes, as I mentioned, our scheme is designed such that there's a portion of the funds that you can withdraw. And it is 50% of every contribution that you make. So every contribution that you make, 50% goes into your savings account. And it's this account that you can withdraw before the retiring age. Okay. Now, what we have noticed is that a lot more withdrawals come when we go and set up a new market. So when you go to a new market and register a lot more people, 6 months, a lot more people can want to do withdrawal. And what we have come to understand that they do this to test our systems, to be sure that, yes, you said that 6 months, if I come, I'll get my money. I've come, do I get my money? And once they get the money, the trust increases. And then we are finding instances where after everything has been done, the person should get the money and say, no, I'm no more interested, put it back. And again, we pay these withdrawals through mobile money. So yes, they do withdrawal before their retiring age. But so far, we have not even gone during the COVID, we were a bit scared that a lot more people will make withdrawals. But so far, we have not even gone beyond 15% of the asset under management for withdrawals. I hope I've been able to address your questions.
Okay, I think Sandeep is okay with that. You will talk more on your panel. We have one more question.
Thank you very much, Mr. Kofi, for your insightful presentation. My name is Elson Gonyi. I'm from Africa. I'm from Zimbabwe. One of the principles, I suppose, in terms of running a pension fund is to make sure that we match assets and liabilities. And my question is, I think it's very simple. How relevant as to our mortality tables? Considering that in terms of, I've checked across Africa, insurance penetration rate has gone low. And in terms of constructing mortality tables, we have relied more on assured lives. And I'm sure even in UK today, they are still recalibrating their mortality tables. What can we do as Africa to ensure that our mortality tables are relevant as we try to match assets and liabilities? I thank you.
Thank you very much. I think that on that score, what we need to do is to constantly engage our actuaries and then also look at trends. For example, what we have done, we have employed a data analytics company to constantly look at our data. Last month, what we noticed was that for next year, just about 41 members will be going on retirement. We also noticed that a chunk of our people are within the middle age bracket, 25 to 35. One of the things we also noticed was that those getting closer to their retiring age are the ones who are actively contributing. So this analytics give us an insight of what to expect into the future. But I think the actuaries will do a better job, and it is something that we should not shy away. We should encourage them to have access to our data, to come up with their models to help us. Because I agree with you, and that is one of the dangers of pension, because as the scheme is growing, the members are also more or less aging, and if care is not taken, you have a lot more liabilities than assets. But the good thing with a defined contribution scheme is that, unless of course you don't hit your advice of Rosemary and you do a very terrible investment, then you'll be in a bad situation. Otherwise, it doesn't really, because after all, it is purely on individual basis. It is what you put in and what you get. However, I encourage that we should engage our actuaries a lot more. The other thing that will do the trick for us, for both insurance and pension, is that we need to do a lot more education. I can speak for Ghana. Ghana, a lot more people are not interested in insurance because they don't even understand, especially life insurance and other things. So our insurance has turned into more like investment. So the insurance companies will tell you that, oh, if you pay this premium 10 years time, this is your sum assured. which for me is technically not a life insurance product. So a lot has to do with education and let people understand the product that we are selling. And this is where I think that our regulators should also help. I think the regulators should help and drive this education.
Thank you very much. Do we have another comment? Okay. Just hold on, Kofi. There's one more.
Okay.
Hello, my name is Monica from Kenya.
Hello, Monica.
Hello. So I wanted to confirm, you have mentioned that you pay the withdrawal through the mobile money. I wanted to confirm, has it been reliable? How do you ensure that the money goes to the intended person and somebody else who had borrowed the mobile phone did not withdraw the money? And also, how is it done? How do you realize that with the custodian to ensure like the custodian who is holding the money pay the funds through the mobile money? Because for us, like we mostly pay through the bank EFTs or RTGSs, which is much easier because the bank is holding the money. They can just wire the money through to the next account. That is my question.
Thank you very much. So for your first question, how do we ensure that the money gets to the intended member? In registering you, one of the key things with our KYC is your mobile number. So we have your mobile number and we also have your unique number with us. In the event that you don't want us to pay through your mobile number, then you have to fill an indemnity form so that you don't come back and say, we sent the money, and it didn't get to you. Yes, we pay through the custodian. So we have a link with the custodian bank. So it's just a matter of, our custodian bank is Standard Chartered Bank. So we just process it on their software and then we roll it over. So it's quite easy. That we have that arrangement with the custodian. The custodian knows that we will be doing withdrawals. What we have done is to ensure that we always have enough funds. Since we do withdrawals, there's always a certain amount of funds in the call account so that it will be easy for the custodian to be able to also push such withdrawals through. But with the mobile money, so far it's been quite safe because of one, in registering you, we take your mobile number. Yes, we admit that in Africa, one person can have several mobile numbers. But then if you want us to push you through another mobile number, then you have to come physically to fill an indemnity form so that you don't come back and tell you didn't get the money. The other point you raised, why should I forget that one? Oh my God, you raised another issue. Can you talk about it?
Oh, I think she's happy with your answers.
Okay, all right, okay, thank you very much.
Yes, so Kofi, if they have, okay, there's the last one, but I don't want us to eat into the next item. What we'll do is Kofi will be on the next panel. He will take up anything else, but let's take the last one.
Good morning, Kofi.
Good morning.
My name is Haninda from Zambia, Zambia State Insurance. Hello?
Hello, I can hear you.
Okay. My question is basically purely from a kind of a marketing point of view. Micro pensions and micro insurance is, I think, to me, a sleeping giant. In your presentation, I think you talked about issues of building trust and issues of allowing the people that contribute towards the same to withdraw money alongside or in the process as they wait for their final day or the pension itself. In your own view, like I said, from a marketing point of view, have you considered a situation where perhaps you could have a rider on the pension benefits, a rider in the term in form of, let's say, maybe, funeral benefits. Because to me, I think when you're addressing the informal sector, such as marketeers, this is one thing that affects them on a daily basis. Thank you.
Thank you very much. Thank you very much. So yes, to the presentation I left. So we have a rider. We actually have what we call the life insurance bonus. What we noticed was that because the scheme was quite young, when people passed away, the little funds that they have accumulated, instead of using it for the people they've left behind, especially when they are school-going children, you know, in Africa, and particularly in Ghana, funeral is a big deal. They tend to use these funds for funeral. So what we have done is to have embedded in our scheme a life insurance bonus. So we have an arrangement with a life insurance company that deals with micro insurance. And what we do is that every contribution that you make, just 0.35% is deducted of that contribution to pay your premium for the life insurance bonus. Now, what you get is that in the event of death, the member gets 4 times his previous year's contribution. And so, for example, if last year I contributed $1,000, if the person passes away in 2020, he's going to get 4 times $1,000, which he contributed last year, as his life insurance bonus. And then, of course, the fund that has contributed plus interest will again be paid to the beneficiaries. So we have that rider in there. One of the things we are working on currently is to look at what we call health insurance and even loss of income insurance. So we are talking to some insurance companies because we also noticed that for some of the informal sector workers, sometimes through no fault of theirs, they lose income. So for example, quite recently, that was about 2 weeks ago, one of the markets in Ghana got bent. Now for such a person, what's going to happen? So we are talking to some insurance companies to see if we can have more riders. But you are right. We have a rider like that, which we call the life insurance bonus. Thank you very much.
Okay, thank you very much, Kofi. We really appreciate your insights. Let's appreciate Kofi. Thank you, Kofi. We will be joining you soon on the panel. And also,
how do I get my coffee?
Say again.
How do I get my coffee?
Your coffee will be coming. You'll be coming as well, virtually.
Thank you.
Okay. Yeah, so we'll be going to a break. By the way, we've got a big chunk of our delegates online. So we are quite busy online. We have a bigger number than you guys tune in from everywhere, from South Africa to Egypt to Ghana, to Rwanda, to Botswana. So the participation online has been very good. I think obviously COVID has taught us new lessons. So let's go for a break. I will ask you to go for the photo. If the gentleman is ready, then your tea is just behind you. And let's come back in 15 minutes so that we catch up. The next presentation is by the team from NWealth. And we will want also them to get time to present their insights. Thank you very much. If you need any assistance with any of your items, whether it's accommodation, whether it's travel, whether it's anything to do with the summit, you could talk to me or you could talk to Saya, is on our client relations team. And welcome to Naivasha.